Welcome to the latest edition of the Officials. We have a very good show for you today, and I hope you are liking the previous ones as well. So if you can put like and subscribe, we would very much appreciate it. In today's edition, we are going to address what is on people's minds, not just the traders, but the general public. Are we in a war? Of course, there's a war somewhere, right? Whether it's Ukraine, Russia, Israel, Gaza, Israel, Lebanon, and you could say Iran, Israel as well. But it's this thing broadening. And that's what concerns people because if you look at history in the 30s, everything started with little hot areas here and there. And then over time, it just became like a big ink blot. And we're heading there. As you know, I have been traveling a little bit, and I was in the Middle East last week. And I was in Fujairah while the missiles, the counterattack by Iran, got unleashed. That proved a couple of things, at least in my eyes. Number one, you can only push an enemy so far before the enemy retaliates. And number two, it also proved that the Israeli defenses are not what we all thought they were. They were holes. The missiles got through. And of course, we all know that Israel is belligerent and immediately vowed to counterattack. I became a little concerned about the situation, but to be very fair, not overly, because when you're very powerful and you have the ability to counterattack and you're belligerent, you do it immediately, or even before the other guy attacks you. So that sent me to me some signals that maybe things are not quite as people think they are. And it is clear that the support of the US is so needed and ever present. So what happened then was oil prices, which is what we are talking about here, went over $80, over 81 in fact. And very soon after, since there was no follow through on the now counterattack by Israel, then prices came down in a hurry. And by most accounts, prices currently have between $5 and $7 of geopolitical risk. So things could go down again to 72, 73, or even lower, depending on what you think the free market says the free market price should be. I have here my colleagues, a group of the officials. Thank you for joining in this program. And what I would like to do today is start with dear Harry T on the issue of how he sees this thing going. And I would invite you to not be a Westerner, if you can, in your comments, to approach them from a global point of view, as if you were somebody that just came in from space. How do you see the situation evolving?
Well, I guess there are a couple of things. First, Israel has vowed to respond, and we had today comments from Defense Minister Gallant, who said that the response would be coming, and it would be lethal, and more importantly, it would be surprising. I think personally, the U.S. being the biggest backer politically and militarily of Israel, is holding back Israel's hand because there's an election around the corner. Now, if I were to step away from my Western viewpoint and look at it from an alien perspective, the issue around Israel and Iran goes beyond Israel and Iran. Obviously, it's the Middle East. And if we were to have an extreme scenario that were to cut off, for example, the passage of oil through the Straits of Hormuz, we are not only affecting large producers, Kuwait, Saudi Arabia, Iraq, Iran itself, but we're also affecting very large consumers of the oil that transits through that passage, China, India, amongst others. And so, trying to think of whether or not we get escalation without miscalculation that could then lead us into that extreme scenario. That is basically what is at stake. What can they do that would not lead to that extreme scenario?
And I think you put it very well. How to have escalation without miscalculation. How can you apply finesse to something that is essentially blowing up? And sometimes you don't know the radius. I was talking this morning to one of my sources who works for Saudi Arabia. And he was also highlighting the fact that customers like China would be very much affected by some situation happening in the Straits of Hormuz. Most people I also spoke about, I tried to obtain some numbers in the past week or so about how much gets affected, and everybody comes up with a little bit of a different angle to it. But you have an oil flow that it may be close to 18, 20 million barrels per day, but you also have LNG, which, as we know, is highly explosive as well. And nobody wants to see that happening, any stoppage in the flow, because then you affect Japan, you affect Korea, you affect China, and of course you affect the local economies. It's a very serious and explosive situation. And I think you also mentioned that the U.S. is holding Israel's hand, and I don't think it's holding it nicely. It's like, come back here, don't do anything silly.
If we consider, as you know, Israeli Prime Minister Benjamin Netanyahu had a sit down, or actually a telephone call with President Biden. We had obviously the transcript of that call with all the things that we would expect in terms of de-escalation talks, ceasefires, etc., etc. I honestly think that the departing president of the United States does not want to beleaguer the future president of the United States with a war. And so they're holding back Israel's hands, whereas I think the narrative for Netanyahu is different. It's a longer term one. You were mentioning more belligerent. And I'm thinking he is looking at this as an opportunity, once in a lifetime opportunity, to reshape relations in the region, in particular, diminish Iran. And that is, looking at it from above, the sort of scenario. And how do you do that without causing a global catastrophe? Because, as you rightly mentioned, consumers, not just of oil and gas, but oil products as well, whether they're in the east or in the west, the producers themselves, this would be an amount of oil that cannot be replaced by alternative sources, and certainly cannot be simply mitigated by the release of strategic stocks from IEA countries, for example. So we have a real problem on our hands if there is miscalculation.
And I am seeing also from that higher plane how Saudi Arabia, MBS, met the Iranian foreign minister today, in fact. And while in the West we may think that Iran really has no friends, actually they do, or they're putting efforts in reestablishing relationships with them. From another angle of a higher plane, however, is...
If I may add, you struck the optics there, because it wasn't foreign minister to foreign minister. It was foreign minister to virtual head of state.
Yes.
And that is a big, big signal.
That's a big, big signal. And all the countries have said, if you're going to bomb them and send planes, not through our airspace, please. Right? Whether they can stop them is a different thing. But the signal is there, don't involve us in that adventure. But again, from a higher plane, what I have seen is that these frictions in the Middle East are since time immemorial. I mean, we can say they are 1,300 years old, but actually, if you go back, they fight for a long time. And I'm a peaceful man. I hope these things don't happen, but I am realistic. Is this a flare-up? Hopefully, it comes down. And maybe at this time, because, and I want to bring Will in here, is this conversation happened at the time that the U.S. was about to get pummeled by Hurricane Milton. But maybe that even had a little bit to do in the mind of the U.S. administration, Kamala and Biden, because they don't want to be looking like they're pouring money into Israel or Ukraine at a time that the American people are drenched underwater, lose their homes, and they get no money. What did you see the impact of the hurricane, and how is that turning out?
Yeah, so I think there's a lot of well, rightly so. There's a lot of concern initially. It looked like it was going to be a pretty historically strong hurricane, and it was forecast to collide directly with Tampa, pretty much. And wind speeds up at max wind gusts were like 160 kilometers an hour, and it was moving with considerable pace. But then in the aftermath, we made landfall yesterday evening, and in the aftermath, it seems to have
To be just another
yeah,
hurricane, so to
yeah,
speak.
yeah, and thankfully, loss of life seems to be limited, and a lot of people were able to get out of the area ahead of time as well. So, yeah, it seems to not have been as bad as many
Okay,
people are
that's good. At
expecting.
least something happened not as we were fearing. And also in the Middle East, things are not happening as we were fearing before. So I guess it's 2 out of 2. And another big issue that has been happening in markets is the cash infusion by the Chinese government. So, Ed, we have seen a lot of ups and some downs in the equity markets in China. How are we ending up now, and the line of travel going further?
Well, obviously, initially when we had that big release of monetary policy announcements of cutting rates and everything from the PBOC, the Chinese stock market and its Asian counterparts as well, in the wake of that, really surged upwards. So I think the CSI 300 went up by nearly 30% very, very quickly, and then we went into Golden Week. So they had a week-long holiday where no trading could
To
happen
think
in
it
China.
through.
Exactly. They had a bit of time to ruminate on what they'd done, on
Yeah.
like the consequences. And then when we opened again this week, we saw a quick drop off by about 7%.
So they said,
the
"I
other day.
overbought."
Oh no, we went too far. We got to draw it back. And then today it's actually kind of steadied a little bit. I think it rose by 1%, but then it's sold off a little bit again towards the end of trading. So I think the direction of travel is still going to be a return downwards. But on Saturday we've got the meeting and the press conference that we'll see to see the fiscal policy that China's going
But
to
we're
bring in.
still up about 17% from the beginning of it. So if we take the noise and whatever, it looks like that. I realize the following. Every time, and this should be for all the viewers, every time you have more than 2 people together, you get at least 3 views. and they change continuously. I change my mind based on evidence, I think, but I have my own bias. And having been in China, I like it very much, and I think they're very modern and they're doing a lot of things. And maybe they became too modern and too advanced, and then you become asymptotic in your development. But people like Harry think that the monetary stimulus is not enough.
Yes, indeed. So they pulled out the monetary bazooka, right? Let's call it by its name. Reducing repo rates, which then affect the rest of the yield curve in China. Having provisions to buy a second home, reducing reserve requirements at commercial banks. All that is well and fine. But we all know the notorious lags, both variable in length and in effect, of monetary policy. And with Will, we're talking about monetary policy and how do you get a monetary expansion? You need demand for credit, right? You could lower the cost of money as much as you want. If there's no demand for credit, there's no one willing to take on debt to go into a large ticket purchase like a house, a vehicle, or even invest, then that's not going to do a lot of good to the real economy. They also had provisions allowing investors liquidity to invest in the stock market. So what did we see? Liquidity go into the financial sphere, and the real economy, well, we'll have to just wait and see if we get any positive effects. And to Ed's point, really people are banking on now a fiscal bazooka to get China to its famous 5% economic growth target.
I don't like the word bazooka, but I get the
I thought
meaning.
you would
It
have
just
appreciated that.
spews money everywhere.
Oh,
But
helicopter then.
yeah, helicopter drop-offs. But I think the situation is, in my opinion, quite dire in several sectors, economic sectors. And we may need helicopters or bazookas or just plain bags of money, even though they generate so much inflation. in France and in Germany. You had some thoughts about France.
Yes. I mean, France is obviously, the government is in a very precarious situation. When you look at Parliament, obviously it's divided. So the government is hanging by a thread, and thanks to the far right withholding any objection right now for the time being, the government is still alive.
I thought they didn't like the far right over there,
Well,
except when it helps them.
true. But the far right, the Minister of Interior has some policies that are not too far away from the far right. So for now, they're holding back and the government's in place. But the difficulty is that the Prime Minister said we will need to raise taxes and we will need to cut spending because we have this budget of 60 billion, or we have this hole in our budget of 60 billion that we need to fill. And if you think back just not so long ago, costs of borrowing for France exceeded those of Spain. So they have a serious problem. When you think about the EU or the Eurozone, we often used to think about core versus periphery. So it would be the well-behaved Germans and French, right, fiscally responsible, and then of course countries in the Mediterranean, the Italians, the Spanish, who would be irresponsible, and therefore there would be this spread between the yield of a Bund or OAT in France and Italian debt or Spanish debt. So now France is in that situation. It's like it has a hole to plug. How is it going to get through the measures? Will the government fall or not in the next couple of weeks? We don't know.
And
So
they don't want to cut down spending, which is what they should do.
they're supposed to, but as always, don't cut spending in my area. So France is in a difficult position, that fiscally speaking, for sure.
It's very interesting how in a country like Argentina, that is France square or US square or all these countries that overspend and don't tax and don't get their books in, finally they got a president that is committed to reducing expenditure. And he seems to be popular while doing it, which is amazing to me. So maybe you need to get so crushed and so down that finally you can start to recover. A little bit like Thatcher did in the UK or Reagan did in the US. But I don't think we're quite there yet. In the meantime, all these things have two impacts in commodities and oil. Because if you spend too much, you get a misallocation. The state absorbs too much and the private sector cannot. And this, for some commodities, is negative. You have a contracting economy, and then the oil price falls, and this is why we still think today that once this flare-up between Israel and Iran goes away, we are going again to a 6-something in the oil price. At the same time, I have another thought that over the longer term, as money is created, then you will have an inflationary pressure on the price of everything, including oil. But we are not quite there yet. What would be, say, a Bank of England point of view about those thoughts?
Yeah, I mean, from the kind of the medium-term outlook that you gave there, I would completely agree. We have a lot of very bearish macro indicators that are going to weigh on oil prices, and then in the shorter term, pockets of geopolitical risk can obviously elevate those prices and detach it from that core underlying macro trend. And yeah, money printing as well will create inflation. As to where that inflation will land, it may vary across components of the.
My timing is roughly at the end of 2 quarters that we'll see that monetary inflation showing up in the price of goods. You have a little bit of a longer experience on those things, Harry. Why don't we close with
I'll
those
say
thoughts?
that to Ed's point, money printing involves quantitative easing, which we no longer have in the US. We have an easing cycle in the cost of borrowing money. So it may take, in my view, a little bit longer. And then if you do have excess liquidity, then typically that flows into risky assets. And risky assets are anything from equities to alternative assets such as commodities. And that inflationary pressure may well push up prices. So from an economic point of view, depending on how quickly the pace of easing goes and whether that liquidity is indeed diverted to those assets, the liquidity wave could float the boat of oil and equities. But I think the key point that you raise which is very important, is it's very hard to quantify how much geopolitical risk is there. But given that the macro narrative prior to the retaliation of Iran on Israel was already taking prices down, you have only this premium to keep them afloat. And if Israel does nothing, then the low 70s, maybe even a six handle, cannot be precluded.
Dear viewer, please like and subscribe our podcast, The Officials. We'll be back. Thank you very much.